Matt Welch with the Welch Group. I just want to take a quick second and help you guys understand flood insurance and understand how to read your policy a little bit easier. Basically, what we have here is I've attached two policies. One is a FEMA flooding policy. And again, when I say FEMA, I'm talking about the federal government. And then the second one is a private flood. Now, if we go back 5 or 6 years ago, we didn't have private flood available, but now we do. In the past, it's always been FEMA. Anybody who remembers Katrina and those types of storms, FEMA was a big deal during that time. So with that said, what's important to understand is with the FEMA flood policy, it doesn't matter who the carrier is. So in this case, it says Bankers, but it could say Travelers, it could say Hartford, it could say Wright Flood. It doesn't matter. The premium that the person pays should be the same regardless, okay? Because FEMA sets the rates based on the customer's address. And in return, what happens there is regardless of the carrier, the premium is the same. So while FEMA underwrites this policy here and makes the rates and handles the claims and that kind of stuff, they pay Bankers to handle all of the paperwork on the flood policy. And again, that's the only difference. That's why some of them you may see Wright Flood here, Travelers or whomever. But FEMA is the underlying carrier or insurer on all flood policies through FEMA. With that said, if we come down through here, these are basically rating factors that are plugged into the system based on the property appraiser. Come over here, it's basically the same thing. However, the one thing that is important is you'll notice that this particular home is in an AE flood zone, okay? There are several flood zones, and AE is a higher risk flood zone than a lot of the other ones. So if this person has a mortgage, which would be found right down here, this person has a mortgage, in all likelihood, the mortgage company is going to require them to carry flood insurance. If this flood zone was X, and I think the one right down here, yeah, so like this particular home has a flood zone X, that is still a flood zone, but it's the least likely to flood zone. And in that case, the mortgage companies won't require that person to carry flood insurance. Now, a lot of times I have people say to me, well, I'm not in a flood zone. I don't need flood insurance. Well, the entire state of Florida is in a flood zone. There's just varying differences in the flood zone. So you may be in an X flood zone, which is the least likely to flood. So your mortgage company may not require you to carry it, but you're still in a flood zone, and that flood zone is X. The other thing that I often get from people is, I don't need the flood insurance because I'm not in a high-risk flood zone. Well, you don't need it unless you have a flood. Okay, if you have a flood, that's when you need it. And if you look around the world, everybody sort of thinks of Florida as being more flood prone than some other areas. But if you look at Iowa and some places like that along the Mississippi River, you'll see that they are notorious for flooding, and those are out in the middle of farmlands. So flooding isn't just based on where you're located. There's a lot of different factors that go into it. So again, if you have an X flood zone, your mortgage company may not require you to carry it. But with that said, if you do not have a flood insurance policy in place, there is no coverage. So continuing on down this page, you'll see the dwelling amount. So they have this insured for $126,000. And that is on the buildings. On their contents, they only have $1,000. They have a deductible of $5,000 for both the building and the contents coverage. Now, FEMA flood goes to $250,000 on the home. And if you need anything above that, then you have to go to an excess flood policy. So it would be having two flood policies. You'd have the primary flood, through FEMA, and then you would have an excess flood policy. Truthfully, most people don't do the full insurance value of their home unless they just have to. And most will just max it out at 250,000 or somewhere in between. Come down here, here's all the different rating factors that come into play. And then ultimately here is the premium. And again, flood is always an annual policy. So that is the annual premium for this particular home located in an AE flood zone right here. Okay. Now, side note here, a lot of times people will be buying a home and they'll say, hey, they don't have flood information. Can I just use the neighbor's flood policy? You can't. It's very specific to your particular home. Come down, and this is private flood. Okay, private flood works just like private auto insurance, meaning the different carriers have different rates just depending on their exposure and that kind of stuff. So in this particular case, you can see that this person is written through Neptune. They're in an X flood zone, which is the least likely to flood. These are rating factors on the home. Come down here. This is us. Again, here's the coverages and the amount of coverage that they carry. Now, this is a little bit different. And this one shows you some extra coverages in here that we did not see in the FEMA flood policy. Again, they can do this because it's private flood. So they can add some of the additional coverages in there. But in this case, they have flood coverage up to $200,000 on the dwelling, and they have personal property up to $80,000 of flood coverage. As you can see, the premium is fairly inexpensive compared to an AE flood zone, yet they're picking up a lot more coverage up here. Okay. Come down, and another important fact or another important point to keep in mind when you do the private flood. Again, it varies from carrier to carrier, so you may get a better rate with a different carrier. But more importantly, if you have a mortgage, you want to check and see if they'll accept private flood insurance. Most will, but sometimes they're not familiar with it. And so it's always best before you actually purchase the policy to go back and check with them and just make sure that they will in fact take the flood policy through a private insurer. Another important point and a difference between the two is FEMA flood has a mandatory 30-day wait. Doesn't matter unless it's for a new closing and you're buying the home. But otherwise than that, it doesn't matter. It's got a mandatory 30-day wait. Most private insurance flood carriers usually have about a 3-day wait. So that's kind of important if we have a hurricane coming and you're wanting to get a flood policy put in place. Maybe it slipped your mind or something of that nature. Private flood may be your best bet in that scenario, depending on the proximity of the hurricane to the coast. So another quick side note here that's very important with the difference between the two is this policy right here. You don't have to have a secondary policy, an excess policy, to have more coverage. You just simply request that this amount be increased, and in return, then they will just bump that up. You don't have to buy that excess policy like you do with the FEMA flood. So hope that helps. Hope that explains some of it. If you have any questions, give us a call or check us out on our website at www.thewelchgroup.net. We post a lot of good articles and stuff related to flood insurance, home insurance, auto, commercial, all of that kind of stuff. And we have a lot of articles and stuff listed there. So hope that helps. Thank you.